What's going on, people? How are you all doing? Morin, good to see you as always. Right, can you tell me if you can see my screen all right? What's going on, Angelo? How's it going, man? What's good, bro? So yeah, let me know if my screen's all showing and is it visible? I've upped it to 125%, so it should be nice and clear, but I've also got this new layout, so I need to check. Kept you waiting a while? I don't know about that. I'm bang on time, as always. Right, so let's dive in. So today, just a very casual scan across the alts. Similar stuff to what we did in the private group, but looking at some setups and yeah, just refreshing you guys on the type of setups that you should be looking for, the process in which you scan the altcoins, and yeah, just looking for some opportunity in the market basically. And there is a lot of opportunity at the moment. So good to get into the right frame of mind with things. And I can show you my process, basically, my daily process, my routine, in terms of scanning the alt markets. So let's dive in. So we start things off overlays, right? Start things off with the overlays. So I've got 3 overlay charts. As you can see here, primarily because it gets very, very messy when you have 300 plus markets all stacked on top of one another. But also they're kind of done, relatively speaking, in like chronological order of listing. So these would be more of the dino coins. This is sort of mid, and then these are more new coins. So also it helps me sort of differentiate, between sort of basically historic coins versus new launches a little bit. And I basically just have these. That's all I do in terms of separating them, right? In terms of time difference, I don't have categorical overlays. I don't have like a meme one, an AI one sort of thing. Reason being is because I don't want to impose my thoughts onto the market. I prefer for the market to tell me what's strong, rather than me telling it what I think it's strong, basically. So, and that's basically the approach we should always have with the markets, right? We can focus on particular sectors, knowing that they are strong, but ultimately we need to let the charts do the talking and follow the strength. And that's basically what these overlays do. So we can start here on the first. What's going on, Chapel, Morin? So this has been a bit skewed. I think this is GFT. Not looking too hot. I trade primarily on the hourly, and I use the 15-minute overlays or spaghettis, whatever you want to call them. It gives me a nice view of what's happened on the day, basically, as you can see here in the timings. And I can basically wake up, scan the overlays, look for strength in the market, see what's been strong overnight, focus on those assets, basically. So there's nothing particularly standing out on the first overlay. We can take a look at XRD. Right, let's just go here. XRD. And you can see nice uptrend on the hourly, right? So looking at this chart, there's nothing in particular that really stands out to my eye, okay? What you can see, what's been happening here is essentially just very clean respecting of these intra-demand clusters that we form along the way, right? This one didn't quite tap down there, but you can see it's just been a clean ascent, basically, right? A clean ascent in price, and usually we're looking for for clusters that are more like this that we mark out. We don't have anything particularly clean to work with here. In terms of setting alerts to the downside, we could potentially mark this low and set an alert. But we're primarily looking for plays to the upside. We're focusing on strength in the market, not weakness. So yeah, we're looking for plays to the upside. So we can now take a zoom out and look at the higher time frames. But yeah, nothing particularly clean here to work with. There's a bit of an SR here that was broken. Breakout candle here. But in terms of the opportunity we can capitalize on at current, there's nothing really that present. Mask, let's have a look. What's going on, Carleo? So again, we're on the daily here. We can mark out this level. All right, we can mark out this level that price is interacting with at the moment. But we don't really want to be taking a breakout of this level. Ideally, what we'd like to see instead is consolidation to occur here before the breakout. This is a bit too gappy, right? This here. This isn't really consolidation prior to the break because of this space here between the breakout level and the consolidation. So I'd like to see it a bit tighter. But primarily we're looking for hourly trades really when we're looking at the super alts, okay, the overlays. So here we could potentially mark out this zone here, right? And members of my group would be familiar with MSDZs, right? Market structure defense zones is what I call them, where they're not technically really demand zones because, as you can see here, this is quite erratic in structure, right? Quite gappy, but it is where the market structure should be defended if the trend is to continue, essentially, right? So essentially what I'm doing is just going through these charts, looking for strength, looking for areas on which I could sort of get on board, whether that's to the downside or to the upside. Again, here a low. So you could set an alert here, for instance. And yeah, I just want you guys to get into the habit of scanning for strength, not FOMOing, right? Waiting for all the right signals, because there's hundreds of markets at the moment that are popping, right? And there will be more and more as the sort of parabola increases. So you can still be stringent, right? Wait for those right setups to occur. You know, very simple things, right? So like with breakout trades, horizontal breakouts, diagonal breakouts, we're essentially looking for execution on the candle close above this level, right? But what we also want to see is some good consolidation prior to the break. So in essence of that, all we're really looking for is let's say three criteria, right? We want enough touch points to make the level relevant, right? Enough touch points to make it relevant. We want to close full, we want to enter full execution on the trigger of the candle close. And we want to see consolidation underneath the level as well, right? So 3 very clear things that we need. And if we don't get them, that's fine. We move on to the next, all right? There's plenty of opportunity. LPT. And again, half of these things, like I don't know what these alts are, right? I don't know what these alts are and I don't care. I'm letting the market tell me what's strong, right? I'm not imposing my thoughts onto the market. So nothing particularly here on LPT. Sorry, Angela, I missed your question. What about that consolidation under the swing low you just marked out? Which chart was this, sorry? On mask? The consolidation under the swing low. So this? I'm talking about this here. Right, this. Yeah, it's okay, but basically, you know, if you look at the daily, we don't have that, right? And we're marking out the level on the daily, so really we want to be playing that on the daily as well. So if we look at a chart such as, I'm doing this from memory now, but let's see. So ETH5, you can start to see it here, right? Here's the breakout level. And you can just basically see in here where we have that sort of back and forth, right? You've got that red candle. If we move the level a bit up slightly. Or let's try another XVS. So this is super clean, right? Daily levels, right? We're working with daily levels. We can take it even from back here, right? So if we put on magnet, make things super clean. Right, daily level. We've got touch point here, then to the flip side here, here, and here. And then this huge consolidation on the daily underneath the daily level, right? That's really what we want to be seeing. If you compare that to what we saw on Mask, it looks very different, right? You've got this stretching. And it's about playing all the rules on the time frame that you're operating on. So in terms of XVS, it would be looking for consolidation on the daily because it's a daily level, and taking execution on the daily close as well, right? You're not executing on the hourly, you're executing on the daily. This is a swing or position trade, however you want to look at it, and it's one that's going to be a slow burner, but one that we can have a lot of confidence in because of the higher time frame signals. So what we've got here. Uni. Okay. So again, sticking to the hourly really for these super alt plays. And the reason being is because essentially what we want to see with the strength from the super alts, it's primarily, so it's basically one of three, I believe. Well, it's actually really four different systems that we could be utilizing for the overlays, right? So one of them is horizontal breakouts, but that's quite rare, looking at the strength of the charts. Horizontal breakouts are normally something that we can mark up via manual scanning. What we do see quite a lot through scanning strength is this, right? Diagonal breaks. So we can see a lot of these and capitalize on these. You'll also see intra-demand, clean intra-demand clusters that form as well. So I'll give you some examples of that. SCR, right? So this was one of the, it will probably pop up in the third super alt as we go through it as well. Or it was top of the list yesterday, right? So clean intra-demand zone here. And these are typically really nice ways to join strong trends, right? We don't FOMO up here. We do not FOMO up here. We wait patiently for our entries. And what these intra-demand zones give us in strong trending markets is really tight, clean, and responsible invalidation levels, right? So I wouldn't put my stop here, right? I wouldn't be putting my stop here because it's an hourly zone. If this was a daily zone and it was wider, right, then I'd be happy putting my stop at the base of the zone. But because it's a tighter hourly zone and we're already playing with naturally tighter invalidation, I'd stretch it a little bit lower, right? Because what we can also see is sweeps of the lows. So something like this probably makes sense. But this is still really nice and tight invalidation, right? Compared to obviously the daily triggers that we'd be looking at Here we're looking at 5.7%. If we go back to, let's say, XVS, clean this up. Trigger would be either this candle or this candle, but let's say it's this candle here, right? So with the dailies, daily horizontal breakout trades, you're looking at 17% already, and that's even if you're taking the earliest candle, right? So you can see, these are more sure things. You'll have a higher strike rate, a higher win rate with daily breaks for sure. But on the flip side, they take a lot longer to play out, and of course the stopping distance is, hugely different, right? So SCR is an example of a clean intra-demand zone. Then we also have Puffer, very strong market as of late. And we're already into that zone here, right? Already into that zone. And we have another zone here, I believe on the 4 hour. So you can take your stabs at either or. But very strong market, right? Fresh Bybit listing, very strong. Can you chart Zeta? Yeah. I'll take some requests at the end. I just want to run through my process first. So that's probably all I'd pluck out from the first chart, right? Just the first few. I don't delve into here at all. I'm just plucking out the first few outliers, the ones that look particularly strong. So over to number 2. ENS stands out, of course. Holy shit. Not playing. Let's look at the higher time frames. Yeah, so nothing particularly actionable here, unfortunately, right? Nothing particularly actionable. And you can see that I've only just whacked the oscillators on. I didn't even realize they weren't on there, right? In these conditions, they're not particularly useful, right? Especially looking at plays to the upside, right? If you're looking at things that are overextended, starting to diverge, could shake you out of taking the position, but then we just go on to breakout. Typically for breakout trades, I like to just ignore the oscillators, largely speaking. Actually, that's not true, right? That's not true. So if we're looking at the hourlies, I'd be ignoring it. Dailies, if we go back to something like XVS, I believe, on the daily. Right, so when this breakout candle occurred, we weren't too overextended, right? Weren't too overextended. You don't want to see price particularly overextended into the break, but that's something that you can ascertain purely from price action itself as well, right? If we get this consolidation here, then naturally speaking, the oscillators will reset. They'll be gearing up momentum, building up steam for the break, and they won't be in the overextended region anyway. So what are we looking at here? ENS, yeah. Cat. And you can see also that the market isn't particularly frothy at the moment, right? So we're plucking out 5%ers on the day, 6%ers. Obviously, ENS has had a more significant run as of late, but looking at this on the daily, it's not particularly, it's nothing too substantial, right? Later on in the cycle, it will start getting much more crazy, a lot more mental, and we'll start seeing the 30%ers on the day, 40%ers, etc., etc. So this is a nice daily level to work with. The only thing I don't particularly like is this. So when we're looking at our higher time frame horizontal levels, we don't really want to see anomalies to that level. This sort of deviation here poses a bit more of an issue because it means that there might be some latent supply left to disrupt the trade essentially, right? So if you look at this here, there might be some supply in here that could disrupt the path of this breakout, right? So not exactly what we want to see. Although the touch points are nice as well. So it's a market I'll be keeping an eye on. On the daily, on the hourly, sorry, not much here to work with either, right? We could mark out this as an MSDZ, market structure defense zone, right? That's fine. But in here, it was just a gradual climb up, sort of like we've seen on ETH recently, and no real clusters to set alerts in. Manta. Shout out to all the airdrop farmers. I get another 6%. Yeah, nothing really here. This cluster would be something, right? Something of notice if we were stretching up here, but it's too close to us now. ETC. Yeah, nothing on ETC either, apart from this. Again, another market structure defense zone. And you can see that, you know, basically something that I've been saying recently, I've just produced some content on it as well that's coming out shortly on YouTube, is about how you need to adapt to the market, right? You need to adapt to what the market's telling you, and be very fluid, right? Because I'm myself in range-bound conditions, swing failures, sweeps, whatever you want to call them, stop hunts, are one of my primary triggers. But you'll see that in these markets, essentially what happens is we trade very classically, right? We trade very classically and respect bullish market structure to a T. So you can see here, right? Clean bullish market structure. Don't give the SFP traders a trigger to enter. Instead, it's a simple, basic market structure play, right? Just mark out this zone here, enter into the zone, look for upside. It's really as simple as that, right? It's really as simple as that. If you want to then start looking for further confluence, right, we can start looking at the oscillators as well. But rarely are you going to find very clean signals, right? So you're going to have to start bending your rules with the oscillators as well. What I mean by that is like this RSI div, quote unquote, is not textbook, right? It's not textbook at all because the first leg isn't overextended and the second certainly isn't, right? But you're going to have to drop your stringency, drop your criteria to enter, just press green and ape, basically, right? Is the takeaway. It's very, very basic markets to trade at the moment. Don't overcomplicate it for yourself. It won't do you any favors. Right, a bit nicer on the 8.0 on the 30-minute, but again, you can see by the bodies, we don't even have that low, right? The lower low. So yeah, just a word of caution. And if we go to ETH, you can see that demonstrated perfectly, right? So this low here just got taken, right? Just got taken there. This low untouched. This low untouched. Where do we bounce from? Here. No sweep, no swing failure. No sweep, no swing failure, right? So I'm actually long ETH from in here. So I took the trade here, right? I took the trade here as I thought the chart was going to move up from this point here, right? That's basically where I took the position. into this cluster here, right? Market structure defense zone. Not much more to it than that. And stop was, I believe, around here, right? So to cater for just a bit more, just in case we do tap the level, which we did. And you can see close to stop out, right? Close to stop out. Anyway, you get the picture. Close to stop out and then just a climb, right? Just clean market structure in play. That's all it is. Right, so you just have to adapt to the current market conditions. Don't be obstinate. Don't be stubborn in your trading system. Make very quick, sudden fixes to your system, right? And ultimately, yeah, I had a student yesterday that I was speaking to, and you know, basically what I was telling him is that, you know, in range-bound bracketing conditions, he has a mind map of all the systems that he uses, the conditions by which he has to enter his positions. And I was saying to him that, you know, next session we need to put together a completely different playbook just for hyper-trending markets, right? And that's talking about things like dips into intra-demand, market structure defense zones. Very simple plays, right? They're very simple, low confluence plays. But they work in these conditions, right? So you just need to adapt and adjust. That's the main takeaway. We did sweep internal lows on both those occasions. What do you mean by that? Right, so I'd probably stay away from these at this point, just plucking out the top few. And sometimes I play around with it, right? If they're a bit too bunched up, just start dragging them a bit more, scroll them, right? Something like this. So this one stands out. Blast. Right now we're in the new coin section. Another 6%. So this is demand, but not on the hourly. I believe, anyway. Yeah, so 6 hours, nice. So I take it from the 6. I'm always going to take it from the more conservative approach, right? So I'm not gonna do this, because what we could see is price just come down, tap into the technical 6 hour zone here and move, not giving you entry. Right, so I'd rather be in, not miss the move. And yes, this demand zone is very close to current price action. So essentially what we want to be seeing is a move further away, then move in, then bounce. But yeah, you get the gist. This guy, what's going on? Right, so that's the only one that really stands out of the new runners. We can do this. Stretch it out a bit. Merlin, okay. Merlin looking nice. Merlin's one of my spot bags. But nothing too tradable here, right? There's nothing particularly actionable here. This is just a grind up, right? Just a grind up, compression, whatever you want to call it. Nothing particularly that we can action in this chart. Morin. 4th November, we sweep low. Let's go back to ETH then. 4th November, here. But I wasn't talking about 4th November. This is a sweep here, fine. But we're in different conditions now, right? This is what I was talking about. So that's essentially how we go through the super alts. So every morning I'm scanning through these, right? Looking for plays, being patient, only taking them if there's technical triggers to enter, but keeping my eye on the ball, right? We need to keep our eye on the ball in these markets. There's a lot of opportunity out there, and yeah, you'll be rewarded more likely than not by scanning through the markets as often as possible, as long as you can maintain that patience, right? And some level of stringency to enter, and not, having good control over your emotions in terms of things like FOMO, right? So looking at plays like, SCR, this is the clean zone, right? This is where we want to enter. And we're not going to start chasing, right? We're not chasing up here. The chart can look great, right? High time frame chart looking very nice. But we're not going to FOMO, right? We do not FOMO chase. We've got our trigger, right? It'll be very nice if we get that play, right? Very tight invalidation, gives us good risk on the trade. We can size in, relatively speaking. But we don't chase, right? We do not chase. I like Merl as a good example for if there's no setup, just move on. Sometimes I feel like I have 4 setups, 100%, yeah. And you need to have patience and just wait for that technical trigger, okay? So out of the 3 overlays, this is my favorite, particularly because it's new coins, right? New coins are typically the strongest runners. And yes, we've had a lot of dinos popping, right? ADA, Ripple, but throughout the cycle, the biggest gainers will be the new coins. So this is interesting now on Ton, right? This is the first strong alt that we've scanned that has a nice hourly horizontal breakout setup forming, right? So this here, touch point using the bodies, wicks here. Let's see what it looks like on the 30-minute. Okay. So this for me here is good consolidation, right? I'm happy with this. This is viable consolidation. So to paint it out by example, you can see here, right? Hovering around the 50 level. This is typically what we want to see on the oscillators, and we will typically see that if we have consolidation. So yes, we don't need to look at the oscillators, particularly the awesome oscillator when looking at breakouts. It's not something I tend to look at all. But it does help just to have that secondary green light, right? Consolidation, RSI hanging around mid. Now what we're looking for is the breakout candle. It's not a compounding style trade, right? It's a simple breakout trade, 100% installment on the candle close. Let's say we get this now, right? Let's say we get this candle close. We take entry here. Stop always underneath the consolidation prior to the break, right? So a lot of people often ask me about stop placement on breakouts. This is how you do it, right? You place it underneath the consolidation that led to the break. Do not place it underneath the breakout candle low, right? Sometimes you'll get away with it, but we wanna be approaching the markets with confidence, with high win rates, and the absence of greed, right? And believe me, in the long run, that will profit your account and your equity curve, right? So just put it underneath the consolidation. not underneath the breakout candle. Yeah, that's pretty much it, guys. So nice that we got a horizontal setup here. I'll be keeping my eye on ton. And typically, horizontal breakouts are stronger signals than diagonals because they are less subjective, right? More objective plays. With diagonals, the lines can get blurred as to where the trend line should fit. With horizontals, it's much more fixed, much more objective. Got blast there twice. Woo. Yeah, not much here. Not much. There's a daily though, yeah. That's viable. Sound alert. So yeah, I hope you guys get a bit more of a well-rounded understanding of what I'm looking for, the opportunity that I'm looking for, the type of plays that I'm looking at, right? And how I use the overlays to save me a lot of time, scan through the markets. But as I went through in the private stream of my group the other day, the overlays are just one side of it as well, right? So we also have the full list that I tend to scan through. No need for the oscillators. All right, tend to scan through on the dailies, first off. And just by tapping the spacebar, we don't even need this. Just really quickly scan through, see if there's anything that catches my eye. So again, I'd be marking this. Not the biggest fan of this though, right? We want to see no real left side price action, just a clean break, only air. For instance, you know, the XVS setups. We can look at a few more off the top of the dome as well to show you what exactly I'm looking for. Badger, it's nice. So you can see there, right, a mixture of bodies and wicks that we're using to determine the level. No real left side price action here. Yes, we have this, sure, but that's because it's a fairly old coin, right? We don't have something like this though, okay, which is not what I'm looking for. What are the other ones? EFI, we went through. ID. So again, nice level here on the daily. Consolidation prior to the break. And nothing really here, right? So this is fine for me. And essentially all of this as well is fine because it's just compression. What I mean by compression, for those that don't know, is it means that it's been tapped into supply over and over again, exhausting the latent liquidity that could pose as an issue, right? So you can see we've got, you know, supply in here, tapped into, supply in here, tapped into. Intra-supply here, tapped into here, right? So you can see that supply has just been exhausted on the way down. This is the only sort of isolated supply pocket here. But again, if we start getting parabola, then that should be cut through quite easily. So again, nothing of particular concern here. Nice touch points, all right? This curling accumulation at the lows, breakout, consolidation underneath the breakout. It's got all the ingredients. What would your target be for ton on the hourly breakout? Let's have a look. I mean, we're just into price discovery probably at that point, right? Yeah. So this cluster here on ton is the only thing of significance, and we're pretty much already into that, right? Yeah, we're already into that now. So being into it, we're exhausting that supply. In terms of targets, I'd be looking for divergences. I'd be looking for sharp spikes up. I've been speaking to a lot of people about taking profiting in price discovery, how to approach these environments. And essentially, look, like a lot of us are traders, but most of us, almost all of us, have spot positions as well, right? This is a bull run. We have our spot portfolios. The spot portfolios are going to do the hard work for us, right? We leave them alone, set and forget. They're going to bring in the big bucks and the longer position trade style playouts, right? Where, you know, let's say we're holding ton in our portfolio. We're not looking to take anything off for the next, I don't know, 2 to 3 to 6 months sort of thing, right? In terms of trading on perps, I like to realize profits faster than that, okay? I like to take profits in terms of like sharp breaks, right? So if we get like a big breakout candle here, for instance, then I'm going to be immediately closing that position, right? Recycling those gains into other positions that look like this, or that are daily breakouts, for instance, or diagonal breakouts, whatever it is. Because if you just hold through this, right? You hold through this, then essentially what you have to usually suffer through is opportunity cost as price does this, right? And that's not something that I particularly want to be involved in, okay? If BTC nukes, we could even come down to your entry or lower, right? So just be faster to realize profits in these conditions. If we get sharp spikes, if we get divergences, if we get anything that looks particularly toppy and you're in good profit, then just realize that profit and recycle those gains and compound. And that's how you're going to build up your accounts. One thing I want to speak to you guys on this note as well is open risk, right? So I've been speaking to some people recently that are telling me that they're well risk managed, but they're finding huge drawdowns on their account. And I say, okay, cool. So what's your risk management strategy? They say that they take max 5% risk on a trade. Then I ask them how many positions they have open, and they say at times, sometimes 10 positions, right? So that's not risk management. If you've got 10 positions open at 5% each, that's 50% open risk, right? I have a rule on my trading account that I don't want to have more than 25% open risk at any time. So by nature of that, if I'm seeing this sort of candle here, right, huge expansion, I'm in a very good position on the trade. Let's say it's 4 or 5R. Yeah, let's say we enter here, right? Stop here. This happens, right? Okay, so it's nearly a 3R. Take that profit off and recycle it, because if I'm already at max open risk at 25%, then I can't open another position until I close one, right? And that's how you manage overall risk. Now, when I say 25% of my account, I keep very, very little in my trading account, right? So in terms of my liquid net worth, I'm talking about 1% or 1.5%. But in terms of open risk, it's something that you need to think about. You can't just keep opening positions thinking that you're managing risk by keeping them at, 3 to 5% and opening multiple at one time. So yeah, take profits, realize gains, and build up your account, right? Just build it slowly, patiently. Don't look for the home runs. That's what your spot bags are there for. All right, I'm going to wrap things up here. Let's keep an eye on ton. I hope you guys garnered some useful information from the stream. And Flow Zone members, I'll catch you in the group. Any more questions before we close up? Yeah, no worries, Warren. I'll see you in the lounge. All right, guys. Well, it's been good catching up. And yeah, I'll catch you soon. What's that, Angelo? On Badger, how much do you weight will you give to that old PA if you're looking to let them run? Let's have a look. Again, not worried about Badger. All right, not worried about Badger. This is not supply. Here. We have a supply zone in here. But again, if these really gear up the momentum to get up here and do so quickly, then these should be broken through and sliced through pretty easily. So I wouldn't worry about that either. You can monitor reactions. You can set partial take profits in here if you wish to. But ultimately, if this does have the gusto to do something like this, then the likelihood is that we're probably going to, at most, consolidate underneath and then strike through. All right. All right, guys. Have a good day. Happy trading, and I'll catch you all soon.